Assalamualaikum, my name is Nur Anissa Najwa binti Zamri and I'm from the 81B. Today I want to share about sales order and purchase order. Okay, first I want to share about sales order. Okay, what is sales order? Sales order is a confirmation document that is issued to the buyer by the seller prior to the delivery of the specific goods or service. Okay, who prepared it? It means like who prepared for the sales order. Okay, these are issued by the supplier to its buyer before delivery. Okay, next about purpose of sales order. Okay, purpose of sales order. It is issued to confirm the supply of goods and service, which are requests for purchase by a party. It indicates that the buyer has reviewed the item to be supplied. Next, it documents needs of the customer and explain the sale. So, it lists out the detail of the order. This example format for sales order. Okay, next I will explain about purchase order. What is purchase order? Purchase order is legal document buyer send seller to order goods. Okay, this document contains price, the quantity, payment term, and delivery information. It also includes the buyer details. Buyer use purchase order to compare goods delivered and goods order. Okay, who prepared it? Purchase order is prepared by the buyer and is sent to the supplier. Okay, next, purpose of purchase order. Purchase order serves as proof of the legal contract between the buyer and seller that bind both the parties. It authorizes the supplier to deliver the specific material. So, it also authorizes the good receiving department to accept the delivery of the material which are ordered. Next, it also authorizes the account department to accept the invoice from the concerned supplier regarding payment of the delivery. This is an example for format purchase order. Okay, for the conclusion, purchase order is commercial document which bind the purchase to take the delivery of goods contained in the document. If the terms mentioned are satisfied, however, on the acceptance of the sale order by the customer, it becomes binding on the parties concerned. It is issued against the purchase order. Okay, for the next topic, we are going to discuss about delivery order. Okay, meaning for delivery order is the document that details the delivery information of an item, which is very important in distribution. A delivery order is an important document in two ways. It has full details of how the delivery will take place and, in some cases, warrant and the release of the shipment from the port or other authorities. Okay, this is an example for delivery order. Okay, next we are going to talk about invoice. Okay, what is an invoice? An invoice is a timestamp commercial document that item and record a transaction between a buyer and a seller. If goods or service were purchased on credit, the invoice usually specifies the term of the deal and provide the information on the available method of payment. Okay, what is type of invoice? There are 5. First, paper receipt. Second, bill of sale. Third, debit note. Fourth, sales invoice. Fifth, online electronic record. Okay, an invoice is a document that maintains a record of a transaction between a buyer and seller, such as a paper receipt from a store or online record from an e-tender. Second, invoices are a critical element of accounting, internal control and audit. Charge found on an invoice must be approved by the responsible management personnel. So, invoice generally outline payment terms, unit cost, shipping, handling, and any other term outlined during the transaction. Okay, this is an example for invoice.
Good morning to Madam Suryawani. I'm Susmita Palyandi from DAT 1B. I want to present about cash bills. Cash bill. Cash accounting is an accounting method where payment received are recorded during the period in which they are received and expenses are recorded in the period in which they are actually paid. In other words, revenue and expenses are recorded when cash is received and paid, respectively. Used in cash transactions only. Issued by supplier to a customer. Next, credit note and debit note. Credit note. Issued by a supplier to a customer to inform customer that his or her account has been credit with the stated amount. Issued when customer return goods to supplier. The amount written in invoice has been overstated by supplier. Next, debit note. Issued by a supplier to a customer to inform customer that his or her account has been credited with the stated amount. Issued when the amount written in invoice has been understated by supplier. Additional charge has been imposed. Interest is charged to customer for late payment. The last one is official receipt. Official receipt issued by receiver of payment to the payer for payment made by cash or check. That's only. Thank you, madam.
Hi everyone, my name is Nalnishwaran Alagivi Ravichandran from class DAT 1B. Today I want to talk about payment vouchers, which is a payment voucher is a way to record payments made to suppliers and maintain a history of payments that your business has made. Companies use vouchers to gather and file supporting documents that are required to approve and track payment of liabilities. Vouchers are used by accounts payable, which is short-term bills owed by companies to suppliers, invoicing and payroll. A payment voucher is a memorandum of a company liabilities. It's an important accounting tool that ensures payments are properly authorized and help you to determine whether good and service purchased have been actually received. A payment voucher is especially useful in situations where payments are not due immediately. Suppliers often grant companies credit extension so that payment can be made in the near future. The picture shows us one of the example of payment voucher. The other topic is memo. The purpose of a memo is usually found in the opening paragraph and includes the purpose of the memo, the context and problem, and the specific assignment or task. Before indulging the reader with details and the context, give the reader a brief overview of what the memo will be about. Choosing how specific your interaction will be depends on your memo plan style. The more direct the memo plan, the more explicit the introduction should be. Including the purpose of the memo will help clarify the reason the audience should read these documents. The introduction should be brief, approximately the length of a short paragraph. Standard memos are divided into segments to organize the information and to help achieve the writer purpose. The heading segments follow this general format in memo, which is first is to. To is reader's name and their job titles, and the second one is from. From is your name and your job title, and the date, complete and current date, and the subject is what the memo is about and highlighted in some way. The picture shows one of example of a memo. The third one is a check. A check is a written, dated and signed instrument that directs a bank to pay a specific sum of money to the bearer. The person or entity writing the check is known as the payer or drawer, while the person to whom the check is written is the payer. The drawer, on the other hand, is the bank on which the check is drawn. Checks may be cashed or deposited. When the payer presents a check to a bank or other financial institution to negotiate, the funds are drawn from the payer's bank account. It is another way to instruct the bank to transfer funds from the payer's account to the payer or the payee's accounts. Checks are generally written against a checking account, but they can also be used to negotiate funds from a saving or other type of account. In some parts of the world, such as Canada and England, the spelling used is check. And this one is one of the example of a check. The end. Thank you.